Hi guys, my name is Mohammed Aslam Khan. I'm going to teach today Cambridge O-Level Accounting, October-November 2019, question number 5. So we are going to do a sum which is going to interconnect with manufacturing, income statement and balance sheet. So let's start. Before we start, do not forget to subscribe our channel to learn more with us. Let's start now. The following balances were extracted from the books of B Manufacturing on 30th September 2019. Inventory at 1st October 2018. So they have given certain details. We need to read all the details first of all before we move on to the sum. Here I have particularly put some tabs to show which sum I'm going to do. I have manufacturing, income statement and balance sheet here. In exams, you will get a format. So you need to just plot the information in the correct place in the correct format. Okay. Let's start now reading the informations. You have opening inventory, which is raw material 7,900, work in progress 18,000, finished goods 160,000. Basic things you need to know when it comes to raw materials, when it comes to stocks, opening or closing. If it is raw material and work in progress, it is related to manufacturing accounts. Only finished good is related to the income statement. So these are the basic things you need to know when you are doing a sum. Capital 160,000, points 50,000, revenue 475,000. Purchase of raw material is 47,000. Purchase of finished good is 71,000. Production management salaries is 29,500. Administrative wages and salaries is 117,550. Factory wages 55,300. Then we have insurance 9,000. Rent payable 30,000. Commission receivable 8,750. Direct expenses 10,100. General expense 12,000. Building repairs 18,000. Selling and distribution expenses 14,200. Trade payables 29,900. Bank debit means it's on correct side, because if it is credit, it's a bank overdraft. So you have 11,100. Factory machinery, they have given some cost, and cost they are given 90,000, 70,000. Office pictures, they are given provision for depreciation. For provision for depreciation, there's another term you need to know. It is what we say accumulated depreciation. So accumulated depreciation they are given for factory 26,000, office fixtures 36,000, provision for doubtful debt. So there's a small adjustment when it comes to provision for doubtful debt. We say that's opening doubtful debt and closing doubtful debt. How to adjust this, we'll be learning in a while. Trade receivables is 42,000. So they have given certain information. Let's read the information and start the sum. Inventory, this is if you see 30th September 2019. So and if we see above, we saw it's 1st October. So when they start the year particularly 2018, when they start the particular year, we can consider it as opening stock. And whenever it is ending, like if you see here, they are said 30th September 2019, you will consider it is a closing stock. So you have raw material 6,400, work in progress 20,200, finished goods 34,300. Expenses are to be apportioned to the factory. So you need to know factory, what they are saying factory related expense, all are related to manufacturing. Whatever they are saying office, it is related to income statement. So you need to break up all your costs properly. They have said insurance, you need to break up between 60 and 40. So 60% goes to manufacturing and 40% goes to income statement. Rent payable goes in the same way, like 75% to office, 75% to manufacturing, and 25% to office. So the same way you need to apportion the certain cost they have given. And they are given commission receivable 1,200 was due. So this is a accrued income, because you need to get some income, but you have not received it. If you receive it later, then receiving it later means it's an accrued income. I will teach you how to transact accrued income, accrued expense, prepaid income, prepaid expense when you are doing this sum. Selling and distribution expense prepaid were 750, so it's a prepayment, but it's an expense, so prepaid expense. So we'll see how to do this. So before apportioning, we need to see is this apportioning related to this type of expenses. So there's nothing related to these expenses, I hope. So no insurance, no rent payable, no general expense, building repairs. So it's very easy to apportion these areas. If it is there something in related to these areas, then of course you need to calculate this particularly with this calculation, and then you need to approach it. We'll move on to the next part. Depreciation is to be charged on all non-current asset owned at the end of the year as follows. Factory machinery 20% using diminishing or reducing balance method. As you all know that there are two main methods they use in the exams. One is reducing balance method, other one is straight line method. So you need to know which method you need to start by particular understanding this thing. So let's start. Office fixtures at 10% per annum using straight line method. The provision for doubtful debt is to be maintained at a rate of 5%. A check 2,800 paid to trade payable had not been recorded in the books of accounts. So these adjustments I'm going to teach you now one by one. Let's start from the beginning. Okay. Always start with the additional information, so you'll not go wrong Let's start with inventory raw material 6,400. So where do you put? As I said, raw material and finished goods comes under income statement. You can put a small tick if you want, so you will not go wrong. So I will bold here in my Excel to make to show that I am doing the sum correctly, and I to note that the sum has been properly recorded. So when I come back again to the sum, it's not hard for me to find out which I have not taken or is taken. So I will take raw material 6,400. Easy. I'll move on to manufacturing. They have given a formula like this in exam paper. So now I need to write some formats. Let's start with you know plotting prime cost is something important when we start. So I'll write here direct raw material. There are three types of expenses under prime cost. So I'll write these three expenses: direct raw material, then direct labor expenses. Yeah. Then we have direct other expenses. So I have written this correctly. Now let's move on to let's leave some line and I'll write factory overheads, or you can say production overheads, but whichever the answer is correct, overheads. Okay. And I will leave some lines to, I will write here prime cost, because direct raw material plus direct labor plus direct other expenses, all three expenses together, we said as prime cost. So I will write here prime cost. So I'm done with that. So production overhead, I think there's a small spelling mistake. Let me correct it. No mistake we should make in exams. Then let's keep this here. Maybe 8 lines or 9 lines is more than enough. So I'm gonna write here opening work in progress, and I'm gonna write here closing work in progress. Easy. So closing you should deduct. Opening you need to add. So I'm gonna write this because I'm gonna take certain details from additional information. Now let's move on to the question. It starts. It says raw material 6,400. Finished good is 34,300. So I'm gonna move on to raw material. Now this is closing stock I'm talking about. So on a direct raw material, I'll leave some more space because I'll have purchases, and I will leave like 3 lines, and I'll keep here. I will write here closing raw material. Yeah. Then now how much is closing raw material? Easy. So I will show here 6,400. Represented it correctly, 6,400. Now let's move on to the working progress cost. We had closing working progress. How much it was? Let's see how much it was. It was, I'm sorry, I should not mark finished goods. Take working progress is 20,200, because working progress is related to manufacturing. So you need to remember basically raw materials and working progress related to manufacturing, finished goods related to the income statement. So here 20,200, 6,400 has been taken. So I'll mark it here in this way. I'll bold it. So here I will write 20,200. So I'm done with this basic thing, but I need to put in brackets. Always remember, because it's a deduction closing stock. So let's write in this way. Now we are done with the manufacturing basic things. Moving on to the question, expenses are to be apportioned. Now there's something else I need to record. Finished good, as I said, it should go to income statement. Let's start with income statement. I'll put the format of income statement as basic. This is how they're given exams. I'll start with sales. Leave some lines. 2 lines is more than enough, because sometimes you will get written in words. So I will write here cost of sales, a deduction cost of sales. So you'll always start with opening stock, opening finished good, as they are saying in this sum. So better you can say opening stock, opening finished good, something. Both are correct when it comes to paper. And purchase finished good. So that's a plus. You can write purchase of finished. Okay. So then leave a line for 2 lines. Maybe you need to find the manufacturing cost, production amount, and transfer under purchase of finished good. Leave 2 lines and write here closing finished good. Right. So now I'm gonna write closing finished good. Easy. I'm gonna put the questions information 34,300. So once I have recorded this three figures correctly, I need to do one thing. You need to remember, this is the hard thing when it comes to people understanding where to put this adjustment is very important when it comes to accounting. In accounting, in Cambridge O level, they don't give marks for doing the workings. They give marks for appropriately, correctly recording the correct entries in correct places. So that's very important. Now these three, we have recorded these three type of expenses. I mean three type of inventories: 6,400, 20,200, 34,300. So these three inventories should be represented under balance sheet. So I will leave some spaces under non-current asset. I'll leave some spaces because we need to. I'll take this column as cost, accumulated depreciation. Yeah, depreciation. You can also say provision for depreciation. Both are correct in exams, but better you use accumulated depreciation because that's how I use when it comes to exam. Always, even in my charts. So accumulated depreciation I'm done. I'll move here. Carrying amount on net book value. Both are same. Whichever you feel convenient, you can write in book value. Right here, one of the things you can write. So non-current asset, I'll bold it. I'll put a line and keep. So I'll keep some space. I'll move on to current asset. Then whatever you are doing, then and there you should put the format. Then it will not take your time. Always remember, you should always start with inventory. So here there are three inventories which we spoke now. Never use the first column to adjust the entries. Always use the second column under balance sheet. That's a basic thing you need to know when it comes to adjustment. So inventory recording, you have three inventories. So I will put a small line under this. Number one, we have, what do we have? We have raw material 6,400. I'm going to take that to balance sheet. So I'll write raw material, yeah, 1,400. Okay, recorded done. Then I have, what do I have? I have work in progress 20,200. All the three inventories should be recorded here because this is you record under current asset. You record all the inventories for the closing stock. You never record opening stock. So you need to know these differences between opening stock and closing stock. So work in progress. Here you might have 20,200. So I'll record here 20,200. Easy. Then we move on to the third part. We have in question finished goods 34,300. So I'll record here finished goods 34,000. So this recording is very important. You need to see the double entries are properly adjusted and recorded. We're almost done. We are done in income statement, manufacturing, then in balance sheet. So our basic adjustment number one is done. So we are done with the first one. Let's move on to the next part. We have expenses are to be apportioned to the factory and office as follows. Insurance 60%, office 40%. So you have a calculator with you, so you can calculate with me. Insurance. Let's go on to insurance and find out how much is insurance. The insurance is 9,000. I'll bold this 9,000. I just need to know, is there any other expenses they are speaking about? Commission receivable and distribution expense. Is it related to any other expenses here? So no expenses are related. So you can directly go on and take the information correctly. So insurance is 9,000. So I'm going to take 9,000 here. As I have Excel, I'm going to do it fast. Okay. 9,000 into 60 over 100 will give me 5,400. The same formula I'm going to approach here. I'm going to use 40%. You might see here in the cursor bar, I'm using 40%. So this is factory. It's for my convenience. You don't want to show this working. It's for your information I'm using. So this is 60% and 40%. Okay. So I'm going to calculate the same thing. Yeah, 40%. So I'm going to do the same thing for rent payable. Let's move on to rent payable. Yeah. So how much is rent payable? Okay, capital, drawings, revenue, rent payable is 30,000. I'm going to do this. First of all, break down these expenses properly. Then, of course, doing the sum is very easy. So, rent payable is 30,000. I'm going to take the same format for all these four. So, recording is easy. 30,000 is 60%. I am going to delete this. I'm going to auto filter it. So, it's going to be like if you format pane, the same format will be used for all the things. Now, if you take 30,000, move in this way, over 100. So we are done with this. The same thing I'm going to record here. I'm going to say here over 40, over 100, 12,000. So 18,000 and 12,000. Let's move on to general expense and see 10%. Here, no, here they are not taken 60% and 40. Only factory and office is 60% and 40%. So I missed it. So here you need to be very particular what they are saying. So here 75% and 20%. So here 75%. Here I'm going to change the 75%. 30,000 into 75%. So it's 22,500 and this is 25%. 25% will give me 7,500. So 22,500 plus 7,500 is 30,000. Let's move on to general expense. How much is general expense? 12,000. So it's easy. They have said 10% and 12,000 into 10%. Do it in your calculator, 1,200. Same thing for 90%, you need to apply. I'm going to here apply 90. So I get 10,800. Then building repairs, 70% and 30%. I'm moving on to building repairs. Where's the building repairs here? So I forgot to bold this. You need to always remember to bold this. So you will not go wrong in the sum. So building repairs is 18,000. I'm gonna break this down again 18,000 70 and 30%. I'm gonna take this format. So here I'll write here. I'll write building repairs was how much? 18,000. So 18,000 into 70 over 100. I got 12,600. I'm going to use the same thing. I'm going to find 30%. Okay. So 30% is 5,400. That easy. Now we need to put it under income statement and factory. It's very easy. These all comes under production overhead expenses because these are general expenses not related to the production activity. So I can take one by one. Let's start with manufacturing. Insurance. Insurance. How much? Insurance. You have 5,400. So I have recorded that properly. So this one is done in the factory. I'll move on to office, 3,600 income statement. Leave two lines for gross profit. Always go with the format. Whenever you need, put the format. Okay. So then other income, leave another two lines, more than enough. Then you can start expenses. We start with expenses. So with expenses, I can write insurance again. We all know how much was insurance which we found under question workings, 3,600. So I'll record here 3,600. Easy. So I'm done with this. So these are expenses. So you need to put it under brackets. Yeah. I'll write it under brackets. 3,600. Altogether, this 3,600 insurance. Then we are done with the insurance part. And the question number, I think, information number 2. So now let's move on to rent payable. So I will bold this out. Rent payable is 22,500. So I will take it under manufacturing first of all. Rent payable, here I will record 22,500. Then move on to income statement and write here rent payable 22,500. Recorded, done, and dusted. So let's move on to the third part. So once I think in income statement we should record 7,500 because manufacturing is 22,500. Finally, we can check what we have written is correct or not. Then we'll move on to question number, yeah, general expenses 10%, 1,200, 10,800. So I'll move on to production overhead, general expenses 1,200, and we have in income statement we can take general expense 10,800. So I'm done with this third adjustment also. I'll bold this. Then in exams, tick it. Okay, so you can bold it, so you can tick it. So 70%, 30%, 12,600, 5,400. I can write here building repairs. Okay. 5,400. Let's check again. 12,600 and 5,400. Building repairs. 5,400. Okay. Easy. So we are done. Okay, with these basic things, we are done. Let's move on to the next part. I'll bold this up. Yeah. Commission receivable 1,200 was due. So now let's move on to commission receivable. So we are all done with this basic adjustment. Commission receivable is an income. 1,200 was due. So now I want to teach you the basics of this four possible way of things. We say it as I put this in this format for you guys. If you really want, you can learn this. These are the easy ways I can teach accrued and prepayers. Here I will write here income statement. And here I say balance sheet. This is how I teach. And accrued expense, accrued income, prepaid expense, and prepaid income. Easy. Okay, so you need to know these differences. Accrued expense means you are paid, you are not paid your expenses. Accrued income means you are not received your income. Prepaid expense means you have paid in advance for a certain expense. Prepaid income means you are receiving it in advance. So income statement, what you need to do. Accrued expense means always accrued expense or what to say accrued. Yeah, give me a second. Accrued expense or accrued income, you need to add it. It's going to be addition. Prepaid expense and prepaid income is going to be a deduction. This is what people doesn't know. What they need to do in income statement, they don't know. And this is also deduction. So I'll write here in balance sheet where it goes. Accrued expense goes to current liability because you need to pay. Accrued income you need to receive, so it current asset, almost like trade receivable. Prepaid expense you are paid in advance, so current asset. And prepaid income you need to receive, current liability. So these are the basic things you need to know when it comes to understanding the logic box. I say it as logic box of accruals and prepayments. So if you know this logic box, you will not go wrong anywhere. So these are the basic things you need to know when it comes to doing a sum on this. Commission receivable 1200 was due. So now this commission receivable is an accrued income. So what should I do in an income statement? Accrued income should be an addition. Current asset I should send it. So now let's move on to commission receivable. Let's mark it down. This is not related to what to say manufacturing account because you don't get any income on that manufacturing account. It's the cost place. So here I'll write here commission receivable, and I will show the examiner that how did I take this. I can make a bit, I can make this column a bit so I can show my workings properly. So commission receivable, how did I get 8,750 plus 1,200, 1,000. It's an addition, you can show like this. So 9,900. Now this 1,200, yeah, this 1,200 is due and we can consider it as other receivable. Don't take it as accrued income on the balance sheet under current asset. Just take it as other receivable. Maybe two lines, put a receivable and bank. Always write other receivable after leaving some lines. I'll take two lines. No, better. It's not a problem in exams if you leave some spaces. Examiner is not angry with you, but show the workings properly. Just open the bracket and keep 1,200 here because you will not have an idea what are the other receivables you are going to have in the sum. Let's move on to the next part. You should not put an addition here, but I have put an addition for my convenience. But just if you open this bracket and keep, if there's nothing, you can directly close it and finish it off. We are done with that adjustment also. Adjustment number 3 is done. So let's move on to adjustment number 4. Selling and distribution expense were prepaid. So what are the prepaid? Going to be expense or income, you need to deduct. But if you see selling and distribution expense, so it's prepaid expense. So it's a deduction. It also goes to current asset. So it comes under other receivables. Now let's move on to prepaid selling and distribution expense 14,200. That I'm going to deduct. Selling and distribution expense is an expense part. So I'll write here selling and distribution expense, and I'm going to show how much I had selling and distribution expense 14,200. In 14,200, I'm going to deduct 750. Easy. Okay. 14,200 minus 750. How much is the value? Okay. So it should be 13,000. So I'm done with that also. That's an expense. So better to show it under brackets. You can put brackets or finally you can put brackets. That's not a problem. Expenses bolded because you don't want to show the three expenses like indirectly in direct expense. I mean administration, selling and distribution, finance. You don't want to show. It's a big sum, so you can show it under expense column itself. Everything. Let's move on to the next part. So where I didn't finish it off because I have deducted my prepaid expense, but I need to record it on the balance sheet. So I write other receivable, easy. I have kept a space. I'll add here 750. I'm done. So here, no, I'm not going to close it again, guys. Let's keep it on. When we are finalizing the sum, we'll close it. Okay. So now we'll move on to the question. Question number, yeah, question adjustment number 4. So it's done. Let's move on to adjustment number 5. Easy. So these are three adjustments we have. Once adjustment is done, finishing the question is very easy. Depreciation is to be charged on all non-current assets at the end of the year as per factory machinery 20% per annum using diminishing reducing balance method. So I'm going to show you a working here for your understanding. Working uh, 5. Way of knowledge, guys. You know, working is not a must for paper. Just show it wherever you can make it as possible. But working is not a must. If you have additional sheet, they have given, of course show the working. So 20% in reducing balance method. First take your cost. How much is the factory machinery? I'll bold it. I'm doing this sum, so I'm taking 90,000. So cost is 90,000. Easy. So I'll write here 90,000. I move on to my provision for depreciation. I need to deduct that. When it comes to reducing balance method, I need to deduct my provision. 26,000. So I'm gonna reduce my provision for depreciation. Yeah, I'm gonna write provision for depreciation. How much is this? Yeah, I'm gonna minus 26,000. So 90,000 minus 26,000. What is my actual balance? Okay, give me a second. So I got 64,000 as my balance. Now this is my actual carrying amount. I can say it as balance or carrying amount. So in this value only you need to calculate the amount of depreciation. What is the percentage of depreciation they are given here? It's 20%. So I'm taking 20% from this 64,000. So 64,000 into 20%. Yeah, 64,000 into 20% will give me, I can say, yeah, I can directly say it's 12,800. So this is the amount of depreciation. I should show it under income statement. Where do I say show? Show it under income statement. Now, actually, how much depreciation I show it on my balance sheet. So you need to know how much I show in my balance sheet. This is depreciation, which is 12,800 plus. You can also take, what do you say? You can take 12,800 plus last year depreciation 26,000. So I need to show 38,800 under balance sheet. So let's move on to income statement. I'll show here depreciation of factory. I mean, factory doesn't go to income statement because they're saying it's factory machinery. I said factory expenses goes to manufacturing. So you need to be very concerned about the answers which you are writing. Let me move on to manufacturing and say factory machinery depreciation, or you can say machinery depreciation. Yeah, because it's factory already we are doing. So I can write here 12,800. Then I move on to balance sheet. And under balance sheet, I'm going to record non-current asset, factory machinery. Had a cost of 90,000. You all know the sum. When you're doing the sum, always have your passport with you. And you had how much? 38,800. The amount you need to deduct from what do you say? So 90,000 minus 38,800 will give you a carrying amount of 51,400. So we are done with this. Amount of factory machinery. So I hope you guys understood how to calculate a reducing balance method when it comes to adjustment number. Right, let's move on to the next adjustment, which is office pictures. Straight line method is very easy. Take this cost, office picture 70,000. I'm going to take the cost actually. Here, office pictures. If you really want, if you get confused, you can write here factory, so you will not go wrong. The depreciation. I'll write here dip. You make it short term because it's working. That's why I'm writing in short term. Office pictures depreciation. Then how much was my cost? How much was my provision? I don't take because it's a straight line method. I never calculate with provision. I take my cost, multiply, and I get my percentage. Easy. So here you see what's my cost. You have, I'm going to take my cost as 70,000. In 70,000 into 10%. I think it's 10%. So it's 10%. I'm going to bold it because I'm going to finish this sum. So cost 70,000 into 10%. Easy. 10% over 100. Okay, so I hope when I do this sum, 70,000 into 10% over 100, I am getting 7,000. That's the actual depreciation. So which goes to income statement. Okay, so this goes to income statement. I don't know how much it goes to balance sheet. As I said, you need to add the this is depreciation, which is 7,000 plus how much you need to send. You need to add one more thing. What do you say? You need to add the provision. Now let's see how much is the provision. Provision for depreciation, they are given here. Provision for depreciation of office pictures is 36,000. I'm gonna add 36,000 with 7,000 because 7,000 is just depreciation plus 36,000 is balance sheet. So I'm gonna take 1,000 plus 36,000. So my balance sheet, it goes 43,000. Income statement, it should go 7,000. So let's show it under income statement. Here I should show it under, I had a small mistake. This is not income statement, this is manufacturing. Let me change it. Okay, because as I reminded you, this goes because this is a factory is related to manufacturing some. Office is related to income statement. So I'm going to send for income statement office. I will say here expenses depreciation of, there's a office furniture depreciation. Okay. Furniture. So I need to just confirm that I have taken the correct term. Office fixtures they are taken here, right? So I'll take office fixtures itself in the sum. Office fixtures, not furniture depreciation. Office fixtures depreciation. Write the full term when it comes to the sum depreciation. So I have record here. I'm going to record here office fixtures depreciation. Maybe I can write this correct value correctly first of all. Then I need to transfer into the balance sheet. If I have 7,000, if you see office fixtures, here I have. So here I will record office fixtures easy 70,000 minus 43,000. We have calculator with you guys, so deduct it and see how much you are getting. 70,000 minus 43,000, you will get 27,000. So we are done with non-current assets. So I'm happy that we finished adjustment number 5. That's all when it comes to adjustment number 5. Workings are very easy. Now let's move on to adjustment number 6. Just confirming everything is correctly recorded and these areas are finished. You can bold it and keep, so we are done, or you can put a tick. So there's only a few more areas we need to cover. Provision for doubtful debt, very important key area. People get upset. Adjustment number 6, provision working 6. So I am going to show you how to do this working 6. Okay. So how do you write this working 6 when it comes to provision for doubtful debt is to be maintained at rate of 5%. Now you need to know one thing. First of all, find your trade receivable. Okay, this is the basic thing you need to know. Before you deduct something in trade receivable, you need to know, do you have any bad debts? So if you have any bad debts, you need to deduct in trade receivable first of all. Let me say, do I have any other bad debts in this sum? So I can deduct it directly from the expense. There is no bad debts, so you can directly calculate the percentage. Now in 42,000 trade receivable, they have said that you need to have a provision of 5%. So let me keep provision for doubtful debt. This is how you do the calculation. So if you don't understand, if you have a bad debt, you deduct the bad debt from the trade receivable. If not, what you need to do is you take the trade receivable, deduct the provision for doubtful debt. From that, you compare with your last year provision for doubtful debt and find over provision or under provision. So now here provision for doubtful debt I have given, they are given in the sum. So I'm gonna find 5%. It's easy. So 42,000 into 5%, 5 over 100 will give you 2,100. So now this amount I should deduct. This is the actual amount I'm going to send for balance sheet. So 42,000 is the amount I'm going to take. Okay, I'm going to show it in brackets for your concern. Minus 2,100 is the amount I'm going to send to balance sheet. So if I take this value and if I deduct value, I get 39,900. So this is the amount which goes to balance sheet first of all. Now I need to know this is amount goes to balance sheet. Now I'm gonna do the income statement value. So income statement, how much I'm taking. That's something important which I need to know. So income statement, if I have provision, they have given a old provision. Let's move on to the provision they have kept already. The provision which they kept in the sum was 6,000 if I'm not mistaken. So this is a earlier provision. So you are comparing your this year's provision. You see this year's provision is 2,100. So actually the provision you have budgeted is too much than what you should use. You have utilized only a small amount. So if you this year provision is less than the last year provision, okay, what it means is you have saved your expenses. So if you save your expenses as an income, you consider, so 6,000 minus 2,100 will give you, this is not an under provision, this is a over provision, 3,100. So this we can write over provision, which comes to income statement. So you need to remember the difference between over provision and under provision. Many people do mistakes. Over provision is where when you compare your this year provision with the last year provision, your this year provision is lower than the last year provision. So you get the value. This over provision goes to income statement as income. Okay, so it goes as income, other income. Okay, but when it comes to under provision, it's not like that. in your provision last year you have budgeted small, but your expense are very large. Maybe your provision is very large this year because your doubtful debts is very large. You are guaranteed. So what happens? That becomes under provision, and that should be sent under expense. Now because we have here own provision, I'm sending it to the income statement. So let's take 2100 to the income statement. One by one, we'll move on. Yeah. So let's record provision. Okay, or you can say oh provision doubtful debts. Go down. There's no there's no particular bad debts here in the sum, unfortunately. So here you can write. I'm sorry. All provision comes under income, as I said. So I'll take this under other income, and it's 3,900. So it's an addition. Then on the balance sheet, I'm going to take the receivables, not 42,000, guys. It's going to be, let's see how much is the amount. So the amount trade receivable, let's write this down. You had I think in the workings you got 39,900. So I'm going to send for income statement. Balance sheet 39,900. So done with that adjustment. Now let me compare. Have I recorded correctly? So I have done. I'll move on to question. Confirm it. Always confirm what you did. So 2,100 I compared. 3,900 I sent for income statement. Done. Balance sheet I sent 39,900. So done. If you really wanted to show this for 2,000 minus 2,100, you can show in this area also. You can show if you really feel that that is important to show to the examiner. You can write here 42,000 minus 2,100. It's not a must, but if you really want, you can show here. So let's move on to the next part. We're done with the trade receivable. So adjustments almost done. Last adjustment, easy adjustment we have. It's seventh adjustment. It says that provision check worth 2,800. Pay to trade payable had not been recorded in the book. So if you pay a check, the bank account should go down, and your trade creditor should receive that amount. So your trade creditor's value should also go down. So trade credit is also known as trade payables. So let me take trade payables first of all from this book. Under balance sheet, this is current liability, so I'll leave some spaces here. So other receivable is too much far. So if you really want, you can write. I keep some spaces, but here it's in Excel. I can move it here and there. I have kept here, but I'll leave some spaces for capital. Here I'll write total assets. So I can finish my non-current liability. Most of the time, non-current liability is very less tested in your exams when it comes to Cambridge O level. Then we have current liabilities. How much is current liabilities? I'm gonna make it as a small heading. Current liability and non-current liability. So current liabilities, how much we have? We have 39,000. I think trade payables. Let's take trade payables and deduct 2,800 from this value. You can show it here. Trade payable, we got 21,900. 21,900. 21,900 minus, sorry, 21,900 minus 2,800. So we can show here. You have calculated, so type it and get the value 9,100. So here you have another balance because it's a bank transfer, it's a check payment. Bank, I can show here how much is the bank balance. First of all, let me see. The bank balance 11,100. So I'm going to take bank balance. So these areas also I need to mark it because we finished these areas. Almost the half of the sum is done. So 11,100 I'm going to take and deduct 2,800. So bank 11,100 minus 2,800, right? So I'm going to take 11,100 minus 2,000. What did I do? 11,100. 8,300. So I'm done with this basic adjustment. Let's move on to the question. Okay, let's record one by one. You have raw material opening stock 7,900. Let me finish one by one. 7,900 opening raw material. So I can go to direct raw material and start writing opening raw material. How much? Okay, what's the value they are given? They're given here opening raw material 7,900. That's done. Then I'll move on to the question again. Work in progress, opening work in progress is 18,000. So I'm gonna move on to manufacturing sum, go down. Then opening working progress is 18,000. I'll record 18,000. That's done. Then we move on to the next part, finished goods. So this is opening stock in income statement. As I said, finished good goes to income statement. How much? There's a small mistake in finished good. It should be 31,000. So I'll record it correctly under income statement 31,000 under opening finished good. So I'm done with this basic finished goods calculation. I mean the opening stock is done almost. So capital is 160,000. Directly take capital under balance sheet 160,000. I'm going to take capital 160,000. So that's done. Then I move on. I'll keep some more space because you will have drawings also sometimes. I saw in the sum there were drawings in the sum. 50,000. So drawings, this it's not cost, it's not stock drawings. If it's stock drawings, you need deduct in income statement also because it's just straightforward drawings. You can leave some space and write your drawings because I'll leave some space to add the profit of income statement. Drawings is giving you 50,000. So it's a deduction. 50,000. So I'm done with these drawings. Let's move on to let's make this in one format, all on mid format because it is going here and there. Certain in middle, certain you might see it in corner. So now it won't go wrong in that way. Then we'll move on to the next part of the question. Revenue 475,000, which is sales. So I will record this under income statement. Sales 475,000. Record here. That's done. Then we move on to question. Again, purchase of raw material is 47,000. So I'm going to take for manufacturing. I can copy this down rather than writing. Saves my time, saves yours. So here I will write here purchase of raw material. How much? We got 47,000. So I'll write here 47,000. Then when it comes to next part, I have purchase of finished goods. This I should take it under income statement, the cost of sales. So I have already written how much? 71,000. So let's check, is it 71,000? Yes, indeed it's production management salaries. So production management salaries is not related to office. I mean, it's not related to factory. It's related to office. So I'll take it under office expense on the income statement. Production management. Give me a second. Production management salaries. Production is related to manufacturing. Yeah. Production is related to manufacturing. The reason production itself meaning that is a management, but they are not said factory workers or something like directly. So I'll consider this as a production overhead expense. I'll take it on a manufacturing production overhead expense. Terms very important. You need to understand the terms. Then only you will be able to understand where you need to put production management salaries. How much is the salary they have given? 29,500. So I'll put it 29,500. So done. Let's move on to the next part of the question. Administrative is a part of what do you say income statement. So I'm going to take income statement administrative salaries. Then administrative salaries, how much they are taking for administrative salaries. Very importantly, you need to know this 117,550. 117,550. Yeah. So I have taken that also. Then we move on to the next part of the sum. Next question. Factory wages is 55,300. Factory wages is direct wages, so I'll take it as direct labor expenses under manufacturing. So direct wages, I can write here under direct labor, a small subtopic which I can write direct wages. Factory wages is what they have given on the sum, right? So how much is factory wages they are given on the sum? Let's write factory wages. They are given around 55,300. Let me bold this also. 55,300. Here I will record 55,300. So I'm done with that too. Then let me move on to the next part of the question. Direct expenses is also known as direct other expenses. So I will take 10,100 directly to the sum under manufacturing account. So direct expenses. So direct other expenses, you can say 10,100. Now why I'm not deducting anything under what to say manufacturing is a cost formula sheet. So you should not deduct anything except the raw materials and work in progress under manufacturing account. So direct expenses was 10,100. So I'll record here. Let me confirm it with the question. Is it 10,100? Yes, indeed, it's 10,100. So we are done with the sum. Now we need to finish this off. This sum. I just want to find out my prime cost. So let's start with the direct raw material. How much I am getting. So I'll put a formula here. I'll make a I'll make it a bit neat, the sum, because everything is a bit cornered. So I will take 7,900 at 47,000. I get 54,900 and deduct 6,400 along with that. So let's deduct and see. Now, if I take this, I will get 48,500. Now let's take these values also to the next side for the sum. So I can put 55,300 and 10,100. I'll take this side. So it will give me a value of prime cost. I can add all these three and see what my prime cost is 113,900. I'm done with my prime cost. I'll take my production overhead cost. I'll add all these three, six. I get 84,000. I'm gonna record here 84,000. 113,900 plus 84,000 will give me 197,900. So I'll record here 197,900. You might have opening work in progress as 18,000 and closing work in progress 20,200. If I deduct with this, you get 2,200. So if I deduct 2,200 along with 197,900, how much will I get? 195,700. This is my cost of production of manufacturing account. I'll write here cost of production. So once I'm done with this sum, what I need to do, my manufacturing is done. I will transfer this 195,700 to the income statement. So I'm gonna move on to income statement and do it. I'll take this to the income statement. Here you might see I'm gonna do it under. I'm gonna take it under cost of sales. Under purchase of finished good only you should take. So I'll record here cost of production as cost of production. Easy, done. 195,700. So let me find my cost of sales. You might have, when it comes to opening finished good, purchase, cost of production, I'm getting 297,700. This is my total. I'm going to deduct 34,300 along with that. Let me take it under correct format as we did for this. But certain things are on meter, certain things are on side. So we have taken the correct format. So let's move on to the sum. Now, this area. So let's take the value. So from 297,700, 34,300. If I deduct, how much will I get? So I'm getting 263,400. Then I'm going to deduct this cost of sales with what do you say when it comes to the expense. I'm going to deduct with sales. So sales is 475,000. If I deduct this, how much I'm getting? What am I doing? Yeah, right. Brackets is important. So if I take 475,000 and deduct 263,400, I will be able to get 211,600. So this is my gross profit. Other income is it's very easy, 13,850. So I'm going to take here 13,850. So I'm going to add the gross profit with other income. So I'll be able to get a value of let me see 225,450. So I'm adding this now. I want to know my expenses. Let's see how much is my expense now. Add one by one, guys. So let me add with you. So to find out how much is my so total expenses is 165,300. So I'm going to deduct with the incomes in order to get the profit, net profit. So I got 60,150 net profit. I'll write here net profit 60,150. So I'm done with that also. Easy adjustments, we are done. Now just to pass this, now this net profit should be transferred to balance sheet and it should be recorded under capital. Okay, so let's take this net profit 60,150 to balance sheet. Before we move on, I just need to finish from, no, I will finish this off. Net profit is how much? 60,150. So now I need to finish the sum. There was no other non-current liability in the sum. So 60,150. Let me take the total of 50,100 and 27,000. I'm getting a non-current asset as 78,200. So I'm gonna take here 78,200. Then I'm going to take the, yeah, I'm going to take my current assets. Altogether, I'm having 100 and yeah, I have one more current asset which I didn't take. Other receivable, 1,200 plus 750. I said you need to finalize at the last moment. So at the last moment, so 1,200 plus 750 will give you 1,950. So all my current assets is giving me a value of 111,050. So I'm going to record here 111,050. So my total assets, how much is my total assets? 78,200 plus 111,050 is giving me 189,250. So this is my total asset. So my below values also should represent the same value. Then only my balance sheet is correct. So let's see is what I have done is correct or not. Let me check with the below appropriate values. You have capital plus net profit, deduct drawings. You get 220,150. So I'll record here 200,000. And there's no non-current liability, so it's not a must to show non-current liability. Trade payables only was there on the sum. Okay, so now we want to represent. So I think 160,000 plus 61,150 minus 50,000 will give you 170,150. So there was a small mistake on that. So there's only trade payable. There's nothing else. So I'm taking this 9,100. I'm gonna show here total equity, which is capital, total capital, and total liabilities. Or I can say capital and total liabilities, whichever you feel convenient. You can also say equity and total liabilities, because liabilities you need to add non-current plus current liabilities. So here you are getting a value of 170,150 plus 19,100 is 189,250. So the same value you are getting here is the amount which is represented here too. So I hope you understood this sum. I'll finish this format and have set the format correctly. Yeah, this is the sum. To ensure that you need to do to ensure that you are doing it correctly, you need to do at least 5 to 6 times the same sum. Practice as much as possible. Watch this video and this will help you a lot for your exams. Best of luck for your upcoming exams, Cambridge O level. But remember, do not forget to subscribe our channel to learn more with us. This is Mohammed Aslam Khan with you. See you in the next video. Bye guys.